Hi, I'm Max Keiser, and welcome to the Keiser Report, the show that tells you about the financial terrorists that are plaguing the world with their corrupt fiat money fractional banking scam. Stacey Herbert.
Max, first headline, America's most dangerous banker. Yes, this is a headline from Simon Johnson, the former chief economist for the IMF, and he's now on Huffington Post telling people Jamie Dimon is the most dangerous banker in America because he was interviewed by the New York Times, and he was saying that JPMorgan should actually be bigger.
Yes, bigger. And you know, give some numbers here, because the numbers are interesting. Talk about the numbers.
JPMorgan has $2 trillion in assets, and that is compared to Lehman Brothers, which had $600 billion when it collapsed and took down the global financial system.
Right. And JPMorgan also has $93 trillion in derivatives.
Yes.
So let's round that off to $100 trillion. That means they've got $2 trillion on the books and $100 trillion in derivatives. That means that they've got 2% on the books to cover their liabilities. Right?
That's correct.
That means that if the derivatives, value of those derivatives drops fractionally, the balance sheet of JPMorgan is wiped out. JPMorgan is also owned in part by the Fed. The Fed owns JPMorgan, and JPMorgan owns the Fed. That's part of the U.S. banking cartel. If JPMorgan goes out of business or has a problem, they go to the Fed for a bailout. They give the Fed their garbage, literally garbage. They give, Jamie Dimon gives Ben Bernanke his dirty underwear. And Ben Bernanke gives Jamie Dimon a few billion fresh T-bills. Or there's dirty diapers from his kids, and Ben Bernanke will give him a few $1 billion in T-bills. And if they don't, then Jamie Dimon says we're going to crash the U.S. economy and the global economy by not rolling over this junk diaper debt collateralized by baby poop, and your entire global economy goes to into the swamp. Right? So that's what a financial terrorist does. They threaten to blow up the economy. Now, why is Jamie Dimon not in Guantanamo Bay right now being violated by Blackwater or Z or whomever is down there, walking on broken glass, eating broken glass? Why? Why is he allowed to roam free? Why is there a double standard? Why do people at airports have to have people from the TSA stick their hands up their swing up to their elbow, and then Jamie Dimon's walking around free as a bird? I don't get it. He's the terrorist.
Well, he's in the news as well because JPMorgan's derivatives book, a lot of it is in silver. They have a massive short position in silver. So, the San Francisco Chronicle asked JPMorgan getting squeezed in silver market. So they have noticed this, and they're asking the question of whether or not they are actually being squeezed. And part of it is, JPMorgan, and it has merged in the last week, has bought up like a huge percentage of the London metals market of copper. So are they hedging themselves against a potential collapse in their silver position?
Absolutely. In other words, I was a broker, I was a money manager. If you've got a huge loss, potential unrealized loss, you're trying to inch your way out of it by putting on what are guaranteed trades. If you monopolize the copper market and they're buying something like 80% of all the available copper, you know that those are incremental gains going forward because you own the copper market. Again, Jamie Dimon saying we need to be even bigger. To do what? Monopolize every commodity in the world and to jack up the price 500% so you can go sail around on your yacht with Osama, whomever you hang out with, you freaking terrorist?
Also involved in the alleged market manipulation of silver is HSBC. And together, JPMorgan and HSBC are in the next two headlines. JPMorgan sued for $6.4 billion over Madoff fraud by liquidating trustee. Bernard Madoff trustee sues HSBC for $9 billion in New York court. So the trustees of the Bernie Madoff Ponzi scheme that collapsed with, $60 billion lost, they are suing HSBC and JPMorgan for their role in aiding and abetting Bernie Madoff.
And what is a Ponzi scheme? What did Bernie Madoff do? Go back to the numbers you spoke of at the top of the show. $100 trillion in derivatives, $2 trillion in equity. As the derivatives need to be rolled over, they use fabricated new derivative contracts to pay off the bad debt that is coming due in the short term. So it's a Ponzi scheme. The company is a huge Ponzi scheme. It's Bernie Madoff on steroids, drinking Four Loko, inhaling alcoholic whipped cream. That's the stock price. It's so far overvalued that just looking at it will give you, narcolepsy. Is that the right word? No, but continue.
Well,
the bends. What am I trying to think of? The bends where you come up through the water and you're going too fast and you get something. I'll have to look that up. We'll put a graphic, what I'm trying to say, in post-production, and the people will know what I'm trying to say.
I don't think the bends is something you see. I think it happens internally. Okay. Well, Max, why is nothing being done to stop JPMorgan, to stop HSBC, to stop these other financial terrorists? Well, let's look at this headline from the New York Times. Frank Rich, Obama, the GOP, and a case of Stockholm Syndrome. Yes, once again, Max Keiser, the Keiser Report. We said it here first. You said, many episodes ago that Obama was suffering from the Stockholm Syndrome. Tell the people what the Stockholm Syndrome is.
Well, first of all, Frank Rich stole my stuff again. Figures. Frank Rich, New York Times. You'd think he'd come up with his own stuff, but no, he's got to steal my stuff. Anyway, yeah, Stockholm Syndrome. It's pretty well known. I mean, you fall in love with your captor, the famous example being Patty Hearst of the Sudanese Liberation Army out there in those photos robbing the bank, because she had fallen in love with her captor. So the point being that in America, people will say, gee, I'm not sure I should buy silver and take down JPMorgan. I mean, after all, they're my prison guard. I mean, I might be let free out of this prison, this paper prison, and then I would know what freedom tastes like, and that scares me. So I want to remain a subject of Jamie Dimon's monarchy, and please, sir, can I have some more gruel?
Well, they say that this is the reason why they're not doing anything to stop these bankers. Now, speaking of dangerous bankers, though, Max.
Yeah.
I have this little video of Ben Bernanke on 60 Minutes.
We could raise interest rates in 15 minutes if we have to. So there really is no problem with raising rates, tightening monetary policy, slowing the economy, reducing inflation at the appropriate time. Now, that time is not now.
You have what degree of confidence in your ability to control this?
100%.
Do you anticipate a scenario in which you would commit to more than $600 billion?
Oh, it's certainly possible.
Well, Ben Bernanke is completely wrong. You can't just raise interest rates in 15 minutes without totally throwing the housing market under the bus and crashing even more than it's already crashing. And this is what academics do, like Ben Bernanke. They talk about deflation. Remember, they were educated at Ivy League schools that are endowed by the top 1%, the oligarchs in America. He goes on TV and talks about deflation and therefore floods the market with cash and credit, which goes through the banking system and goes through companies like JPMorgan, who then put it into the accounts of their privileged 1% clients who buy commodities and assets and stocks and bonds. Those things are going up. But meanwhile, so is food and energy. So for everybody else, like the bottom 99%, they're seeing the cost of their food and energy go up, but they're also seeing their wages and their savings returns go down because all that money is debasing the purchasing power of the currency. So it's by design. Bernanke talks about deflation has two effects. Number one, impoverish the bottom 99% with low interest on savings and low wages, while simultaneously enriching the top 1% by boosting artificially the price of assets. Meanwhile, if you're in the bottom 99%, you've got low wages, and you've got stagflation, and you've got rising food and energy. This guy is kind of the capo de capo, Ben Bernanke. How about if we just get rid of Ben Bernanke and let the market function on its own without this intermediary coming in there and setting the dials and adjusting levels that is completely anathema to the concept of free market capitalism to begin with?
Well, he said that he was 100% certain that he could control this very easily. Now I'm going to show you, like Pinocchio, that he wasn't lying. And this is the silver chart. Silver is going mad tonight. This is as he was speaking, literally as this 60 Minutes video ended. Silver went bonkers. Or as you put it on maxkeiser.com, silver is going nuts thanks to the global insurrection against banker occupation.
It's the silver vigilantes. They are imposing justice where Bernanke is doing none. We used to have the bond vigilantes, but now they've been basically co-opted by the folks at the IMF and the World Bank that are now attacking Ireland and Greece and Hungary, and they're going in there and they're using the bond market as part of their coordinated financial terrorism scheme. So we can't rely on the bonds anymore, the bond vigilantes as they were once now, to restore economic justice. We have to bring in the silver and gold vigilantes, and then now they are in charge, and every time Bernanke speaks, they mark the price higher.
Well, there is also the other global currency for the last 5,000 years is gold, of course, and that is also in the headlines. Gold demand, huge buying from China. So
Wait a minute. I told China on this show. I told them 18 months ago that the only way they could be players is if they increased their supply of gold. Now, what? Does anyone not watch this show? I mean, you got Medvedev holding up that gold coin at one of the G20 meetings after watching the show. You got China increasing their gold supplies after watching this show. Iran too.
well, let's put this into context for people because you're just shouting
Am I
right now.
overreaching?
You're overreaching. But let's talk about the numbers here. China imported 209.7 metric tons of gold in the first 10 months of this year of 2010. That is a 5-fold increase over the previous year. Now, one of the famous names involved in these CFTC hearings that we covered a few months ago of the silver market manipulation, the guy who says it can't happen, that all this manipulation is benign, Jeff Christian, managing director of CPM Group, he says, quote, everybody in the gold market knew there was a surge in investment demand, but they didn't know it was China. Like he was saying, how surprising. We had no idea that China would buy any gold.
And except if you watch the show, which we report on it every week for months, that this is exactly what's going on. These guys live in a place called Stupidville.
Never heard of that town.
It's a place called Stupidville, and they get paid to be stupid. Like Ben Bernanke is a paid moron. He's paid to be a jackass. I mean, let's be honest about it. He's a jackass. And he's paid to be a jackass. He goes in front of Congress and says nonsensical things to make his benefactors, the top 1%, cash in royally as he floods the market with cash that never gets to the wage earners or the pension retirees. Okay? Ben Bernanke, do yourself and everyone a favor. Retire.
Well, that's my final comment here is China is hedging themselves, just as JPMorgan is hedging themselves against their disastrous investment of the massive short in silver. China's protecting themselves against their disastrous investment in the U.S. Treasury bill and mortgage market by buying gold.
All right, Stacey Herbert, thanks again for being on the Keiser Report.
Thank you, Max.
When we come back, we're going to Greece to talk with somebody who's actually taking on these financial terrorists. Don't go away.
Download the official RT application to your iPhone or iPod Touch from the iTunes App Store. Watch RT live on the go. Video on demand, RT's live broadcasts, and RSS feeds now in the palm of your hand. Question more on RT.com.
Welcome back to the Keiser Report. I came across a website a few weeks ago, absolute must viewing. It's called Speculators.gr, as in Greece. Time now to go to Athens, Greece, to talk with Dr. Kyriakos Tobras of StopSpeculators.gr. Dr. Kyriakos, welcome to the Keiser Report.
Hello, how are you?
Very good. Doctor, tell us about your campaign, StopSpeculators.gr.
This campaign started on April of 2010, this year. After we start experiencing here in Greece what was the result of the speculation on our government bonds, pushing the spreads of our government bonds in very, very, very high figures. And that was impossible for Greece to continue the government lending problem. And this is why our government was stretched to follow the IMF and European Union bailout. This is the reason that we did and we start this action because that was not a simple speculation process. We didn't do that because we are against simple speculation, because as you know very well, speculation is the reason that markets exist. We did that because that was a real organized criminal plan with the intent to manipulate the whole Greek economy, to manipulate the country through the manipulation of the government bonds market and of the government lending. So for all these reasons, we start this campaign on April 2010. And for the moment, this fraud charge, what we started, it is still under investigation process in the prosecutor of the Court of Athens.
Okay, so just to be clear, the bond traders have done to Greece what they've done to other countries and what they do to corporations all the time. They use the bond market as a financial weapon to destabilize and to destroy, in this case, a country, Greece. They sell the Greek bonds in a way that is not only ill-served in terms of any financial purpose, but we also know that they sell what are called naked short sales. This is a form of counterfeiting, so that the banks essentially are selling counterfeit bonds purposefully to destabilize the country. I remember back in World War II, countries would counterfeit each other's currencies as a way to destabilize other countries. Now, the IMF and the banks on Wall Street in the City of London counterfeit bonds, Greek bonds. They sell these counterfeit bonds in the market to destabilize the country. Is it difficult to get the population to understand that they're being attacked by financial terrorists?
Exactly. The real term, it is exactly what you said, financial terrorism. This is exactly what happened here in Greece and what will happen in the rest of the European countries. Don't believe that only in Greece is the problem. Greece was just the first victim of this game, which now will be, to that will follow all the other European countries. It is very difficult to explain that to the people here, you understand, because this has very, very complicated financial things that ordinary people, they cannot even understand because they don't have the knowledge even to understand. But I could explain you in very simple words what exactly happened here. On January, when the first crisis started here in Greece, some institutions who have their head offices in London, they start trading on naked CDS on Greek government bonds. In the same time that they were trading on naked CDS with the result to increase the spreads of our bonds, in the same time they was doing a very, very dirty game with the short selling of the government bonds here in Greece. That means they did both the things together and in the same time. From one side, they was trading with naked CDS, increasing the spreads of our bonds, and from the other side, they was creating an artificial offer of bonds in the international market with the short selling of the existing bonds of the market. What was the result? That until January 2010, the short sellers, they was obliged by the Greek law to close positions in 3 days. And if they didn't close position in 3 days, they start paying penalties on that. This term was brought from 3 days to 10 days. And these speculators were facilitated by the Central Bank of Greece to keep position open for 10 days and for more than 10 days and without to pay any penalty about that. What was the result? The result was that after 1 month, every day there were naked CDS to increase our spreads and a lot of bonds offered in the international markets because of the short selling of our bonds. That brought the result to create an artificial offer of Greek bonds without a demand to be with the capacity to absorb all this artificial offer, with the result that the government, when arrived in the point to make auctions for the new bonds, to don't find any buyer for that. what is the criminal side of the topic? The criminal side is that the same persons, the same institutions, and the same funds who were and they are still prime dealers of the Greek government bonds. That means that they have contracts with the Greek government for the promotion of the Greek bonds in the international markets. The same persons and the same institutions, in the same time, they were the issuers of the naked CDS, and they were the same persons who they were short selling the Greek bonds in the international market. This is the point of the situations, and this is why we say that all that was a criminal plan, well organized and internationally supported, because these people, they could never do that in the international markets if the Standard & Poor's, the Moody's, and the Fitch, they were not helping them with the reports that they were publishing every day in this period of these 4 months, claiming that Greece is going in the bankruptcy. Every day the Greek bankruptcy was the first news on the international news all around the world. This helped and facilitated this game because they found how to do that, supporting that with wrong information. What happened here in Greece? Don't think that is different from what is happening to the other countries of the European Union. That means the debt crisis that we have in Greece today and the deficit crisis that our economies have is not something that regards only Greece. This is a global problem, and this regards all European countries. All European economies have the same problem. The point it is that they start doing this game here because the market is very small and it was very easy to manipulate this market. And after they manipulate this market, they used Greece like experiment. They create the formula on how to manipulate the rest of the European markets. And now you see that after 3-4 months, they start making the same game in Ireland, but with different actions because Irish problem is different than the Greek problem, but the concept is the same. How they manipulate the Greek market, now in the same way, the same persons, the same institutions, the same banks, they are manipulating the Irish market, and then they will do that with Portugal, then with Spain, and then with Italy. This is the game. The game is global, and it regards all of us. This is not just a Greek problem limited to the Greek economy or to the Greek population, to the Greek citizens, or to the Greek taxpayers. All the European taxpayers will pay the crisis because the crisis is not of the system, is not of the economies, the crisis is of the banks because they manage in a very, very bad way their assets. And now all of us in the European Union, all the citizens and the taxpayers, we are called to pay the crisis of the banks.
Okay, Dr. Tobras, I hope everyone in Greece replays and watches what you just said for the previous few minutes, because it is quite a well-articulated encapsulation of exactly what's been going on in Greece and around Europe. Now, let me just fill in some of the terms here. For CDS or naked CDS, you're talking about a credit default swap, which is an invention of Blythe Masters over there at JPMorgan, a known financial terrorist. The credit default swap was sold as an insurance product, but it's actually a fake insurance product because to have an adequate qualification as an insurance product, you must have some reserve in the bank to reserve against, which doesn't exist with a CDS. It's an invention purely to create financial terrorism. And as you point out, and this is one of the points that I think needs to be made here, people ask, well, why would the banks destroy a country like Greece? Why would they use these fraudulent counterfeit products like CDS and naked short selling? Because they have, as you point out, bets on the collapse of Greece. So as the collapse of Greece ensues, as the collapse of Ireland continues, the return on their bets that they've made in these international markets increases spectacularly.
CDS is fake insurance. The people need to understand that, because to have an insurance product, you need an insurance company to issue an insurance contract. And I ask you, Did you ever saw any CDS contract? What is the form that it has? It is a form of a legal insurance policy. No. This is the main reason why CDS is not insurance. This is first thing. A second thing, let's go to see who are the issuers of the CDS. They speak about insurance policies that somebody is betting that Greece or some other country will go in bankruptcy, and they promise billions to the people who they buy this contract. The question is one, and it is very simple. If Greece tomorrow morning really will go in bankruptcy, do these issuers of the CDS, do they have the money to pay the people who they bought these contracts? You know what is the answer? No, they don't have. They are bluffing, because CDS is a financial bluff. It is fake insurance. It is just betting. It is clandestine betting, and they don't have the funds and the solvability to pay these bets if default will really happen.
Okay, Dr. Tobras, we have to leave it there. Thanks so much for being on the Keiser Report.
Thank you to support our action. Thank you.
And that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. I want to thank my guest, Dr. Kyriakos Tobras. His website is stopspeculators.gr. If you want to send me an email, you can do so at keiserreport@rttv.ru. Until next time, this is Max Keiser saying bye, y'all.